Yeah, I tell people like I'm your attorney, right? You can tell me everything bad. We're going to present your case in the best light to the underwriter. So you might say, well, God, I've only been on this job for 10 months. I'm not at the 24-month thing, or I decided to be cool and I started doing ride share on the side. Now I got this income and then we got to ask questions.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Welcome back to the Real Estate Pros podcast. I'm Cody Crabb with Investor Fuel, and today we are talking to Clarence Ferguson from Cross Country Mortgage out in Phoenix. Clarence works directly with real estate investors, flippers, wholesalers, helping them get deals funded, especially in the situations where income isn't quite as clean or traditional as they would like. So he's been doing this for over 10 years, and we're going to get into non-QM lending, borrower quality, and what investors need to understand before they go chasing whatever random deal. Clarence, so nice to meet you today, and we appreciate you joining us.
Nice to meet you as well. Thank you for having me on your show.
Yeah, of course. So just to start out, as I always say, it seems like real estate is not one of those things that's written on every kid's like I want to be this someday type list. So out of curiosity, and you also mentioned to me that you used to be a personal trainer. So I'm like, I don't know what this path is going to be, but it's not a straight line. That's for sure. It's for certain. So can you give us a little bit of like an intro into how you got into real estate and what path brought you here?
Well, yeah, I definitely didn't dream of being a loan officer or doing anything with mortgages. But I was a personal trainer for many years and I was doing loans part-time. I'd get a loan as a referral and I was working at a broker shop and I just turn them in, they close them for me. And I kept doing that for many, many years. Then I completely got out of the business in 2008, everything that was going on with that crazy time.
Did something happen in 2008? No.
Yeah.
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 Comes up
A
often
little
on this
something
podcast.
happened.
Yeah.
And so then I just kept training, doing my, personal training business. That's the Coach Clarence there. Everyone calls me Coach Clarence. So, back around 2019, I started getting the itch. I kept getting referrals and I was paying other guys and they were closing them. And I'm like, man, I should just start doing this again. So I had to go get relicensed and start the whole thing all over. And then, I really actually went full time in 2026.
Hmm.
I was
Gotcha.
kind
So
of
it's
phasing out of
relatively in a
business.
shift right now. Yeah.
Yeah.
Gotcha.
Um,
Okay.
mhm.
So what does it look like today? Like, who are you typically working with? What's your day-to-day look like right now?
We're seeing in Arizona a lot of self-employed people, especially with the economy. People are getting gig,
Mm.
side jobs. The gig economy is really growing, so that complexes their finances, the underwriting. So we're jumping a lot into non-QM, which is out of the box financing, not your straight W-2 people who have, 8 years on the job, 8 years of W-2. We get people who have a couple years of W-2 and now they got a 1099. So now we got to find, or sometimes they make a ton of money and write it off. So we got to use bank statements. And that's where the whole non-QM comes in. And we're really
Yeah.
good at that.
So just for someone that is listening and is not super aware of the terminology, not going to raise my hand, but let's just say it's somebody that's not me. So is non-QM lending just when it's not a typical straightforward situation? Is it just kind of an irregular situation?
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Yeah, it's actually called non-qualified mortgage or traditional
Mm.
mortgages. Straight up, like I said, you got your W-2s, you got 2 years on the job, you got 2 years of residence. Anything that's just a lot of times we just call them vanilla loans. They just go right through, right? So a non-QM or non-qualified mortgage, there's something where maybe it's a huge loan amount. Maybe there's multiple types of income that you got to factor in. Sometimes it's stated income, like in the old days, it's called stated income, where we're using like 1099, we're using P&L statements, stuff like that. Anything that takes it outside the norm is considered non-QM.
Okay. So that's I find this pretty interesting because you called it a game changer. Was
Absolutely.
that a game changer for you and your business, or is that a game changer in some other way?
Both, because a lot of times if you don't know how to write those loans or originate those loans, you end up turning them down or you make a mistake and they fall out of underwriting, which I've done all of the above. I'm not gonna sit there and act like I was the greatest thing because I'm not. But you get really good at finding solutions. A lot of times we're the cleanup guys. Like I was telling you earlier, we saved a guy on a jumbo deal. He had what we call a credit event. Something happened with his credit and it dropped his score down to a 602,
Ooh.
which is obviously not conventional financing, which would be a conventional mortgage, but we were able to do him and we did what we call a income qualifier from his assets. So we took some
Mm.
assets he had and we divided it by 360 months and that got him the extra income. And then the lender we used allowed you to go down to a 600. So we were able to save his purchase.
Interesting. So what I'm hearing is, if you're like, I should totally be able to afford a mortgage, and a bank is like, I don't think so. Maybe this is the route to go to kind of show like, look, I actually can do this, and you have to kind of prove it in a different way. So am I in the right ballpark?
Yeah, I tell people like I'm your attorney, right? You can tell me everything bad. We're going to present your case in the best light to the underwriter. So you might say, well, God, I've only been on this job for 10 months. I'm not at the 24-month thing. Or I decided to be cool and I started doing ride share on the side. Now I got this income and then we got to ask questions. How long you been doing it? How are you getting paid? Well, I got 10, or I got bank statements. Okay. And so it really starts to open up other avenues. So instead of just saying no, because a lot of times you go to the bank and you say all that stuff and they go, yeah, we can't help you.
Yeah,
So we get
exactly.
those. It is a game changer because it opens up possibility, especially with investors, because their income a lot of times is tricky. Sometimes they get paid in cash. Sometimes they're not really getting traditional pay stubs. So the non-QM really opens those doors up for a lot of people who traditionally wouldn't be qualified.
So now, what types of lenders can actually do this? Is this any lender can do it, they just won't, or is this like only you have to be specialized to do this?
Well, each lender, when they decide how they're going to lend, they decide what type of borrowers they want to deal with. Some lenders like, we only want 700 FICO. I'm just making up a number, but 700 FICO, got to be clean, 2 years. We don't want any of the messy stuff. Some lenders like, we want to get creative and open our portfolio. We want to do self-employed. We want to do first-time home buyers. We want to do down payment assistance. So all those things open up. So there are a lot of lenders who do non-traditional lending. and just who you partner with. We have a whole division that does non-traditional lending. So we're getting trained every week. We are learning different things. I even will go in and go, wow, I didn't know that. Like sometimes I'll get a weird scenario and I'll have to go work on it. Like I have the gentleman today, he's young, he wants to start investing. And we're going to put together something for him so he can start investing. There are a lot of people who want to invest because they watch stuff on TV and they go, man, you should have rental properties.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
And they don't know how to do it, So we got people who use Airbnb income. So it's crazy, man. It's like for me, I go in every day and I'm like, wow, I'm learning on the job sometimes. Like I learn something new from some of the more experienced guys. We have guys who all they do is investors. That's all they want to invest with.
So
So I get to be in the room and hear the scenarios.
yeah, so just out of curiosity, is this just because like are these non-QM loans, is this mostly when like people just don't know what their options are? Like it seems like more people would take advantage of this if they knew that this was an option, because I think a lot of people end up in a situation where it's like, well, I know I can afford it, just on paper it looks like I can't afford it. This sounds like a situation for that, right? So is the reason
Yes.
people don't do this just because they don't really know it exists, or because what is that?
It's the same thing as 20% down. How many years? Think about, I don't know how old you are, Cody, but for years we were taught, put 20% down, put 20% down. That's
It's
the
it's
only
what
way
I
to do
heard
it.
until I looked at 20% and was like, "Are you sure?" That's
Yeah, I mean, people have 20% down. It's a different world.
yeah.
But you can put 0 down, 3.5%. So it's the same thing. The same thing as down payment assistance. People just don't know. So they'll look at their stuff, especially self-employed guys, because they know what they write off. We get their tax returns. We're like, okay. But, they were like, hey, we see this guy's bank statements and this guy is depositing the money. He's got a good credit score, so he's paying his bills. So let's provide a solution for him. Now, you're not going to get the fancy pricing you see on TV. Your rate's going to be high. It's all about risk, right? Your interest rate, I just did a reel on Instagram about this. Your rate is based on the risk inherent with the loan.
Hmm.
So if you do a bank statement, you got to put a little bit of your own money in there, 15, 20%, depending on the program. And your rate's going to be a little higher because basically the bank is saying, we're trusting you that even though we see this money coming in, you might give me a statement and take all that money out and go do something else. So there's a higher rate there. But if you explain that to people and the numbers make sense, it's just education. That's the biggest thing about, you have to be an advisor. That's why we call ourselves advisors, not loan officers. We're not just calling you, go, hey, I work here. And I go, okay, put you in this box. Tell me what your goals are. What are your financial plans? So that's kind of how our team works.
I find that really interesting. So is this like calling out people that are like, hey, you should try to look into this even if you think you can't afford it? Or is this more like, I know I can afford it, I just know that it doesn't look like I can afford it?
I'd say both. In
Interesting.
investing or buying a home is what you want to do. See what your options are. You can always get a game plan. Let's say you just don't qualify right now. Even with all the great products, sometimes people just aren't there yet. But they leave with a plan like, let's get your score up to here. Let's do this. I want you to finance yourself this. So we don't give tax advice, but we suggest, okay, you're writing off every year. The banks want to see something if you're going to use your tax returns. Like I have a young lady, she's a doctor. She's traditionally following the rules. She's writing stuff off so she can get a big return. So when you see her income, even though she pays all her bills, she doesn't look like she has any money. So I had introduced her. She never heard of the bank statement. I said, I saw her bank statements. I'm like, you qualify on your bank statements. I go, you got to put 15 to 20% down. So she's like, well, what's my options? I go, well, you can file your taxes the right way and show more income. So
Yeah.
it's those conversations, that people don't know. A lot of times they don't know. They'll come in the door and go, well, I've been on the job and then I'm doing some Uber because I need extra money. Can I use that? And that's how those conversations open up.
Interesting. Okay. So, what do you see? You probably see pretty much any situation come across your desk based on what you've told me here. So, is there something that you hear all the time that's just flat out wrong? Like that you hear and it's like people believe that, but that is not true.
I think one of the big ones, which is funny to me, because I have people with 800 FICOs and they'll be like, I don't want to get my credit pulled because it's going to lower my score. And it's like there's this window of time, and depending on who you ask, it might be 30 days, it might be 45 days, but there's codes. Like we have a code as cross country, right? So when we pull someone's credit, the credit bureaus know that this is a mortgage pull, and there might be others after that. So they give you a window of time. It doesn't really affect your score. The higher your score, the less likely that to happen. Now, if you have a lower FICO,
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
get a soft pull. That should give us a good idea. Soft pull means we're just going to pull one or two bureaus and we better get a picture. And that's one of the biggest things I hear. And it's like crazy, like, because other industries will measure credit because, like, if you go to a car dealership, instead of like, they'll take your credit report and then they'll send it to somebody else and then they'll pull it. And you'll see like 10 different pulls. And it's like, what the heck? So that's one of the biggest things I hear now. And the same thing with the down payment. I have to
Yeah.
save up for a down payment. No, you don't.
Or maybe you do, just not nearly as long as you thought you might have to.
Right.
Yeah. Yeah.
Down
Okay.
payment system, which is, I mean, it's done through conventional and government financing, but it is considered non-traditional. Someone's giving you your down payment. Pretty cool,
Yeah, that's interesting. So, okay. So what should someone see in their finances if they're like an ideal person to look into this? Like, is this like, I have multiple streams of income, I've got, you mentioned a couple of these things. I'm just curious if there's any other sort of weird situations that would be like, ideally you should look into this.
I would say the first thing you want to ask yourself is this income consistent? Underwriters always want to know, is this consistent? Is there a history of this income? Okay, that's the first thing. Like, let's say, because a lot of times people will say, hey, I get $500 extra for overtime. Then my first question is, how long have you been getting it? Because the underwriters want to go back and see. You might be getting it now, but if there's no history of it, we really can't use it. Okay. And then you also want to go, how am I getting this income? Like I had a lady try to do a refinance. She's got 3 roommates. She's like, well, they pay me for their rooms. Well, how are they paying? Well, they just give me money, cash. Sometimes they Zelle me. That's too hairy. You
Yeah.
need consistency. So, but sometimes that can work. You can use border income, but again, it's the history of it. So if you've been getting they call it border income. If you've been getting border income for the last 2 years and you can prove it's going to my account every month, you see this from so-and-so, so-and-so. Also, people now get paid from Zelle, Cash App. All these things are when you might go, maybe I should be looking at a different type of loan scenario instead of going, well, I just can't buy because I get my income from Zelle. I mean, listen, I don't know what kind of audience you have, but I've done exotic dancers. I'll use that term. And they're cash based, but guess what? They're putting
Yeah.
money in their accounts.
Yeah. Money's money. I mean, like you said, I think it's more just about like, being able to prove it. And that's kind of the line, it sounds like, is that if you maybe feel like it's not going to be the easiest situation to prove, then this would.
A friend of mine, Sean Cahan, he's called the Mortgage Geek. He told me a word that I've never forgot. It's big in mortgages is ATR, the ability to repay.
Oh,
That
yeah.
factors more than your credit, believe it or not.
It makes sense because who cares what your credit is if you can pay it back?
History.
Yeah.
Right. Ability to repay. ATR.
Yeah. That's a really good point. So, okay. As things are growing for you in your business right now, is there anything that you're expanding into or wanting to offer, like maybe expand to new locations or something like that? Or is this, are you kind of like, yep, we're a small town, firm and we like it this way, or
Oh,
how
no,
does it
we
work?
can lend in 50 states, and I am really branching out and doing a lot of more reverse mortgages
Oh, interesting.
because that provides incomes for older people. Yeah, over 62.
Give us a quick, super quick. I know, man, I've seen him on the infomercials and stuff, but if you just give me a super quick on reverse mortgages for people that are listening to this.
Okay, so let's say you have a home. I'll use simple math. It's 100 grand. You owe it free and clear. You can take a percentage of that equity and have it either paid out to you at once or paid out every month as income. And you don't have to pay it back as long as you're alive and living in the home. And I'm giving you a really
Yeah.
high level. I'm not getting into all the weeds. Or you can sell that property, take that income, and we call it a reverse purchase. Take that money, put it on a new, smaller place. Maybe one of your spouse passed away or your partner passed away. Now you don't need that big house. So let's sell that house, put it into a new house. Now you have a mortgage free and clear. You're only paying your taxes and your insurance,
Hmm.
that kind of thing. So that's what a reverse mortgage. It's basically it's the money comes to you and you can use it as a absolute payout or you can make payments. So
So,
that's what the reverse mortgage is.
yeah, okay. So my question
Simplified.
is there a way that an investor can take advantage of a reverse mortgage, or is this not for them?
If they meet the age criteria 62 and up, I've never really seen. Usually it's only on one property. You can't like use a reverse mortgage on more than
Well,
one
yeah,
property.
that's
At
true
least
because you have
not
to
to my
don't you have to
knowledge.
live in
Maybe
it too?
guys
Yeah. So
listen, they may tag you and say he's lying. I got this product, which we don't I haven't seen it yet because that would be awesome.
yeah, good to know. Good to know. Well, I was just curious because our listeners are all real estate investors. So I was like, we should probably just say like, is this a thing that they could use? And if it's not, let's just
But a
say that.
real estate investor, man, that's great for them to link up with somebody who does reverse mortgages because that opens up cash flow, you
True.
know? And the person who like, let's say they have an investment property that's been sitting and it's perfect for an older couple. And that couple like, well, we don't want to take on a new mortgage. Well, let's do a reverse, get you the cash, buy the smaller property. Now that investor just sold that place.
Yeah, that's a good point.
So it's all collaboration. Sometimes it works, sometimes it doesn't.
Yeah, and I think it's important to call out like the connection with you is what would make that like, you know what I mean? That there's just having the people in your network and things, knowing as real estate investors, I think having a network that kind of has these different abilities and focuses and stuff is going to make a huge difference just because of that.
Correct.
So,
Correct.
all right. So, as far as we're kind of running out of time here. So just to kind of finish this out here, if people want to work with you, you said you lend in all 50 states. Is that right?
That's correct.
So if people want to work with you, if they want to get in touch with you, ask you questions, where can they find you online?
It's just my first and last name.com. So clarenceferguson.com. Pull me right up. You can email me at clarence.ferguson@ccm.com. And yeah, and I have a podcast called I Heard That. If we put out a show every week, and my YouTube channel is Coach Clarence TV. And so we do the visual portion of the podcast, and I'm guest on kind of like what you do.
Gotcha. Cool. And
We
what kind of
talk all
stuff do you
the
talk
money
about?
stuff. So
What kind of stuff do
yeah.
you talk about on the podcast?
Same thing, finances, mindset, and fitness. I kind of bring some of my fitness stuff. Sometimes I have like a fitness expert on. We'll have a guy who does investments. We'll have a guy who does insurance. Like I'm interviewing an insurance guy coming up here. I'm going to interview a financial advisor. Just different things, ways for people to invest. So I've had real estate investors on, and they talk about their properties and what they like to do. So it's really cool. And it's
All
just
right.
like
Oh
I
yeah.
told you in the beginning, it was about people over 40 because that's generally when people start going, hey, let's find ways to invest money.
Yeah. Yeah. Totally. Okay. Yeah. That sounds like a good time. So check out his podcast. We'll link to that for you in our
Okay.
notes here. But thank you so much for joining us today. You've given us a lot of
Thank
good
you.
info here. And listeners, if you liked what you heard and you learned something, 'cause I know you did, go ahead and hit subscribe and follow us so you can get more episodes like this. Until then, we'll see you on the next episode of Real Estate Pros. Take care.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.